If the market's up massive, here's what usually happens next. We just saw a gap up of over 2.5% on the S&P 500. This isn't a meme stock. This is a collection of the 500 biggest stocks in the United States. Obviously, this jump is due to fundamental news, a ceasefire between the US and Iran, but the data we're going to be looking at can be applied to any time we see this in the future. Now, over the past 10 years, we've seen this, a 2.5% gap up 5 times on the overall market. Why? Because the market never moves like this. Literally never. Each time was a massive win over the next 2 months. Just holding for 60 days following a gap up like this, you get yourself 13% on the S&P. To put how absurd that is in perspective, you basically beat like half of all stock market years just holding for 60 days after this signal. It's only happened 5 times. Keep that in mind. And even more importantly, when does it usually happen? You probably guessed during really scary times where people aren't too sure of what's going on. Again, this isn't going to be a super technical signal. This is going to be based on something fundamentally important to the stock market. COVID, a good example of that, quite a few times actually. The bottom of the 2022 bear market during the interest rate hike cycle. And what do you know, another bottom during Liberation Day in 2025, just about a year ago. So yes, things can be volatile in the short term. These events, as important as they are to move a market 2.5%, don't just go away magically. So volatile short term, very promising 30 to 60 day horizon. And it certainly helps when sentiment is starting to turn at least a little more bullish than it has been. Simplify your investing. www.marketspredictor.com. Godspeed.